Hi everyone, my name's John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and make sure you are aware of all your risks prior to placing any trades. Also note that in this presentation, we will be using hypothetical computer simulated trades. They are believed to be as accurately represented as possible, but keep in mind that live results can vary for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance and success coach with Locke in Your Success LLC, and myself and my team are here to help you win in the markets and in life as well. Today I'm here to guide you into the realm of high probability income trading. Now in a moment we're going to be going over the winning trade, but before we do, let me tell you what I mean when I talk about an income trading strategy. An income strategy is where we put ourselves in the position to make money through the passage of time rather than depending solely on the price movement moving in our direction. This means that we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to win all the time, but it does mean that the probabilities of us winning are much higher than they might be otherwise. Now, when you find yourself looking for more information as we're going along, simply contact us at lockeinyoursuccess.com or ask a question in the comments in this video, and we can direct you to where you can find more information. All right, so let's move on. The winning trade we're looking at today is called an M3.4U. This is one of the many broken wing butterfly style strategies that we trade regularly on the Russell 2000 index. This is a fairly simple strategy that is easy to manage, can be traded with as little as $2,500 per trade. The strategy enters 56 days to expiration. It has an exit loss trigger of $250 per contract or per butterfly, which would be about 10% of our planned capital of $2,500. However, historically, the losses generally run around 4% of our planned capital. As far as a win rate, it is historically, we win about 80% of the trades we enter. The position has no profit target. However, historically, the average win runs about 5 to 8% of our planned capital per month, with the larger monthly wins being in the 25% range. So let's take a look at the trade. So here we are. It is Friday, March 20th, 2020. We are 56 days to expiration for our May expiration options. We're going to enter a broken wing butterfly, and for those of you who may be new, this is an analytical software called OptionNet Explorer. We have our options for our index. You can see we're looking at the RUT, or the Russell 2000 index. We have our options strikes down here. Shows our month of expirations across the top. We're looking at the May 15th expiration 2020, and like again, it's 56 days to expiration. Our asset price is right here. Right now it's 1,030. If we take a look here, we're selling options that are about 20 points below the money for our short strikes on our broken wing butterfly. So here at 10.10, we're selling 4 of those. And in a normal entry, we would go up 40 points, 10, 20, 30, 40 right here, and we would enter 2 1050s, and then we go down 60 points, 10, 20, 30, 40, 50, 60 points, and buy 2 950s. Now, when we do that in this particular position, let me just simulate that. I'm going to take out these 2 and add 2 here. We end up in a position that is positive for delta. Now, the entry on this position requires that we be almost flat delta or almost 0. So that being the case, this entry wouldn't work for us. So to correct our entry, what we're going to do is we're going to start moving this long strike. This we call strikes we buy long strikes. We're going to start moving this long strike higher. And if we move it to here, we end up with a delta of about 1. That is acceptable for the position size. So what we're doing here is we're buying what we call a 2 lot or 2 butterflies. Now on this here, we're going to have a planned capital of $5,000 because if you remember, we said our planned capital was $2,500 per butterfly. So we'll have a planned capital of $5,000. We're going to have an exit loss trigger, or some people call it a max loss, of $500. And again, we don't have a profit target on the strategy. Now, on a position this size, we are going to adjust this. We have adjustments in both upside direction and the downside direction. Our upside direction adjustments are going to occur if we're inside the tent, and by inside the tent we mean if we're within the triangle here. We're going to make an adjustment to the upside when we're -3 delta on this position size, and to the downside we're going to make an adjustment when we are +4 delta. Again, that's inside the tent. If we get outside the tent to the upside, then our delta adjustment goes to 0. In other words, we're going to maintain positive delta up here if we come outside the tent. And as far as the downside goes, basically we're going to end up rolling back if we get over 4 delta. It doesn't really matter if we're inside or outside the tent. So that's essentially what we're going to be doing for an adjustment strategy. If we hit our +4 delta and we're inside the tent, then we're going to correct that delta by taking this strike, for example, and moving it up or down. In the case if we have a positive delta problem, we'll move it in this direction. If we have a negative delta problem, we'll move it in the other direction. Also, during the trade, you might see me rolling up some of these lower longs, in other words, making this wing shorter as well. So within the strategy, there's certain guidelines on, depending on how big your upper wing width is, we're going to start narrowing our downside wing. And that's just a risk control measure is all that is. And it gives us a little bit more flexibility in our delta range too when we make an up adjustment. And I'll show you what that means. So as far as this side of the graph, this is what we call our analytical graph. Our asset price goes along the bottom. Our profit and loss goes up and down the side in dollars, and this is percent given how much we actually have in the trade at any given time. So the straight lines here that look like a triangle is going to be the value of the position when the position expires at any given price point given the of the asset. The curved line here, this thin blue line that you're looking at, is called a T+0 line, and that line is a representation of the profit and loss in the position at any given price point today, or at least what the model projects that the profit and loss will be if we move from where we are now. And of course, this dot here is what our profit and loss is as of today. It also represents the asset price. So let's move on and see how we actually, before we even do that, before we move on, let's take a look at our price chart and look at our situation. Now, this is a non-subjective strategy. That could be used subjectively, but as it's shown in the presentation here, it's non-subjective, meaning it doesn't matter what the price movement's doing. We're going to enter at a certain date, and we're just going to see how it goes. So this is entered back here. You can see we just went through this crazy market crash to the downside, and now we're starting to bounce. We don't know where we're going, but we're starting to bounce here. So that's the situation that we're in from a technical standpoint if you're interested. So from here, and we'll just kind of bounce this ahead a few days. We get a pullback in the market, and our profit and loss is just slightly profitable here. Our delta is +2, so our adjustment limit is +4, so we don't have anything to do here. And we move on. Here we get a huge up move in the Russell. I believe this is the biggest up move in one day that we've ever seen in the Russell, 81.1 points. Just a monster move, but there is no reason to do anything. We are outside the tent now, so we're generally going to adjust when we go negative delta. We're still in the positive delta here, so there's really nothing to do. And this kind of goes on that way until the 30th. And on the 30th here, you can see this is our delta number. We turn negative 0.27 delta. So that being the case, we are going to want to do an upside adjustment on this. So what we're going to do, I'm going to take this away. We're going to bring it down. That's going to, and then we want to, after the adjustment, we want to check our delta, make sure it's okay. We're positive 1.15. That's perfectly fine. So we go ahead and we do that. And this is our new resulting position here. So from here, let's just do a couple of days. Right, the market pulls back, which is not surprising. The market's been doing that. We get a really harsh down move here, 85 points down. Again, that is absolutely huge for the Russell, but that's been the market environment we've been in. Regardless, we get a bit of a drawdown, but no big deal here. We're still within our delta limits. We're 2.15. We're allowed 4, and everything looks good. So let's move forward. I'm just going to go to the next adjustment here, which is, let me go back here, which is the 14th of April. So if we go to the 14th of April, we see some time has gone by. We're now up $355, which isn't bad for a $5,000 trade. We're currently hitting our negative delta again, so we're minus 0.34 on the delta. So we are due to make a trade adjustment because we're outside the tent, we're negative delta. So this actually is one possible adjustment with this, and that puts us positive 0.89. What we chose to do, though, is to be a little bit more aggressive with that. We went here, and then we rolled up the lower longs to keep our position size down, and that ends up being 0.66 positive delta. So you can see we don't have a whole lot of difference to the downside. It's a little bit more risky, but it's not bad. And we have the opportunity now to make a little bit more money should the market continue going up. So that was our adjustment here. Realistically, either one would have been fine, and it wouldn't have made a difference either way in the trade. But that's how we adjusted it. Let's move forward here. A couple of days, right? We get a big down move afterwards, but nothing concerning. Our delta numbers are always in control here. And now we start popping the other way. So let's go to our next adjustment. That's on Friday the 24th. Similar situation, right? We are minus 0.56 delta outside the tent. So we're going to go ahead and we're going to move this long strike in. And if depending on how far we move it in, we may also be required to roll up our 960s. So let's see what we actually did here. Yeah, we did that. We took this 1050, we brought it down to our 1030s. And we took our 960s, we brought them up to 970. And again, that brings us slightly positive delta here. It keeps our downside risk fairly reasonable. And now we can maybe get a little bit more out of it. So let's clear that. And this is our new position. So it's 24th. Let's move on to the next adjustment here, which is 4 days later, the 28th. If I ignore the trade, once again, we're slightly negative delta. We do the same thing. We bring these in and we're balancing the downside also. So when I start to get shorter wings here, I have to start bringing in my lower long. In this case here, we took this 1040 and brought that down to 1030 and we rolled up our 970 to 980. So let's take a look at what that looks like. This is our new resulting position. If you look here, now it looks like our expiration line is around 450-ish on this. And let's move forward. Okay, 29th, we get another big up move on the 29th. We run negative delta again. I'm going to take this 1030, we'll bring it down to 1020. And that is our new position there. We're just slightly positive delta. And from there, we do get another pullback. Notice that's what the market's been doing, and this has been giving a lot of other strategies challenges. But on this one here, generally, as long as you're out in this range, this back and forth movement generally doesn't bother you too much, as is evidenced here. I think we get another big down move here on Friday. Okay, our delta limits are still very good here, and that's what our position looks like here on Friday. And then the rest of the week, I believe we were up, except for a little bit here on Wednesday. But we're just kind of chopping back and forth. There's Thursday, and then finally Friday. And realistically, this could be closed off at any time. If you look at this, our mid prices on our options, which is our extrinsic value on our options, it's virtually nothing. There's really no money in them. So there's not really a whole lot of reason to stay in the position here at this point. And in fact, we could have exited a little bit earlier, but we generally hold on to this till these get below a certain value, and that happens on Friday. So let me ignore trades for a sec, go to Friday. And we get this really big up move on the Russell on Friday, and essentially all these options down here are pretty much worth the same thing, right? We have 27 cents, 27 cents, 25 cents, and 25 cents. In other words, there's really no reason to think we're going to get any more profit out of this. So I ended up just closing it out, and if we close this out after commissions, it looks like we have a $442 gain, and that's going to be about 8.8% of our planned capital, which ends up making this a pretty good trade for the month considering the price movement. I mean, we definitely had a lot of price movement there. If you like what you see here, I encourage you to join us and discover how you too can follow along with this and many other great strategies as they unfold during our weekly Options Trading for Income webinars, and where you can also learn about upcoming winning trade presentations, and perhaps best of all, you can get information on our free Trading Performance podcast, where you can learn to become a much more effective trader regardless of the type of trading you do. If you have any questions or comments you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video below and we can get those answered for you. And we'd also encourage you to come on over to thewinningtrade.com, where you can find past episodes of The Winning Trade, as well as a lot of other fantastic information on how to profit through income trading. Thank you, and we'll see you on the next Winning Trade.